But let's go to Rohit. Rohit Srivastava is here. Rohit Srivastava has seen many election and election-based trading and hit of sentiment and all of that, whatever there is to be seen in the market. Rohit, how do you read the screen right now? Cautious or time to build in, or is the chart telling you a big fall? What exactly?
No, I think we are setting up for what should become the election rally. We'll get a slightly more confirmation of that if markets stabilize today and close positive, because the low point of today is very close to a 61% retracement of the move we saw from, say, the low of 19th April to the high of 3rd of May, which is almost a 1,000-point rise. And so we've seen a pullback to that, which should be, I think, almost complete. It's taken 3-4 days. And some of the recent selling, I'm told from my sources, possibly also got to do with some fund closures happening out there. That is why you saw a lot of FII sales in the last 2 days. If that's done and market stabilize and close positive, I think the setup is for what could be an election rally. So that is where we are right now. What is different though this time from previous elections is the pricing in a volatility. So, both of the previous elections, we've seen the VIX go up to at least 24% prior to the election and result announcements. And in the month of that, almost going up to 28 or 35%. And this time around, we've only ticked up to some 14-15%, which is almost half of the VIX reading we had seen before. So that just shows that the market's really not expecting anything out of the blue. A little bit here, a little bit there, but they seem to be pretty much, sanguine about what is going to be the outcome. But what we've also seen in most of the election events all the way back to 2004 is that the markets do tend to anticipate the outcome and move in that direction at the point of the announcement. So, if this is going to be a positive outcome, you will see a election rally or an up move in the markets into the event itself. That is what we've seen in 14, 15. And, the only time it was down was 2004 and then also markets were falling ahead of the event. So it's not that, the event came out of the blue. So I think that's the setup. We are at a very good support to start moving higher. If we see stability and the markets manage to close positive today, I would sense that we are done here. And we do, rally into the election results.
Interesting point you're making. Very contrary to many traders who are nervous, you're saying a case is building for a pre-election rally. Can I just scratch that point a little more with you, Rohit? If 1/3 of the rally, because you think pre-election rally could be short covering, or people on the side may join in. So can I assume that 1/3 of the rally of that move may be in May series itself, but 2/3 the fence sitters actually may come in the June series if the election result actually comes out as a very different than what people are thinking? It could be a big positive surprise and things like that. Could that move continue post June 4 as well?
So, euphoria can build in advance also, because just imagine if the market does go up from here and say crosses 23,000, most people will start jumping in, not really waiting for the election outcome. I know today the mood is a little more confused because after 3 months, we haven't really broken out of this broad range, right? It's a slightly upward slanting range, but it has been a range that we've not come out of in terms of Nifty. So, holding the lows below 22,000 and then selling off from anything above 22,800 is sort of been the case. So that leaves a feeling that, it will fall. In fact, we were also bearish Jan, Feb, March. But that is the time window. Typically the first quarter of the year is where we've seen most of the corrections in the market. And since that has not happened, then this entire phase will start looking like a consolidation. So that is a change in stance that we have sort of taken, that you've seen rotation. Stocks have, stocks that had to correct have seen corrections. There have been steep corrections in individual names. At the same time, there are others that have continued to run up. Now you may see some of those consolidating. You are seeing a pickup in places like FMCG, pharma, which were under correction. So I think you may be right that, a lot of more people will join in post results, but see, whether you do 400 seats or 360 seats, you're still going to make the center, right? So that guess game is just a day's volatility, which is why the VIX itself has collapsed, because they're going to win. There's no fear of being on the border. If you're at 300, you are at a border. then the market prices in risk. What if it doesn't happen? The VIX jumps to 28%. That's not the case. The case here is only of big win, small win. If the win is guaranteed, and so the volatility is going to be slow. I think this rally will be just a slow and continuous thing. And people will slowly, as you rightly pointed out, they slowly come in, getting more and more confident as the move goes on.
Point is taken, the entire pre-election rally and what happens post-election. But what's your take on individual names? Do you have any charts which are looking very interesting at this point of time? And maybe if you can lend some insights on the charts of SBI, it comes out with earnings tomorrow, and for now it's holding up quite smartly.
So the PSU banks have shown a positive momentum in the early part of May, and they've cooled off a bit. I think in the last few days we've seen some cooling off happening there. Whether it's SBI, whether it's Bob, all of them have done that. Some of it may also have happened because of the news that we actually had in between related to the provisioning, which I think is more of an accounting treatment, and that is also sort of adjusted. So the setup is good, I think, for PSU banks to actually gain ground here as the results come in, because we've seen the results momentum for the banks anyway be positive. But what I really want, where I think the catch-up is going to happen is going to be in the rest of the banks, the private banks, NBFCs that have been lagging. So if we actually look at the bank nifty, which almost for a year has been in a broad range, I think the setup is really for it to start breaking out of that and starting it heading higher. So while PSU banks may have been leading most of the year, I think it's time to start looking at the other banks again with a very fresh perspective, especially those which are completely beaten down. And by that I'm actually referring to Kotak Bank or HDFC Bank, which have seen all the worst sentiment get absorbed. And once that has happened, if all the bad news is priced in, then there may actually be opportunities over there.
Okay, time to give a fresh look to the entire banking sector, both private beaten down names as well as PSU banks. Thanks so much, Rohit, for making time and speaking with us today.
If you like this video, then like, share and subscribe to ET Now.